Hey, it's Adam Anderson with WealthGuard Advisors. Thank you for tuning in. Before we start, I wanted to remind you to read our disclosures at the end of this video. Past performance is not indicative of future performance, so read those carefully. We may have interest in buying or selling the stocks we're talking about today, so anyways, be aware of that. Hey, Blake, we were talking about the overall market conditions. A lot of people are kind of concerned, like, hey, we're at highs, but it's kind of weird. We were just at a low 2 weeks ago, not a low, but it had pulled back, and now we've seen a big gain this last week. I think it's 2% for the week. I'm going to share
Yeah,
my
we had
screen with you. You want to talk about that?
we had that big drop a couple weeks ago, Friday, and it was down 2 and something% that day. And now today, or Friday, we had 2 big days in a row of up markets. Today seems mostly tied to China and Trump. The talks are going well, and it looks like we might get some sort of trade deal with China and an easing of these economic tensions that has been brewing for a while now. And so, yeah, it's a good sign for the market. I also think it's important to note that this market is driven by more than just, one or two positive headlines. It's driven by strong earnings that we've been seeing. And so one company that I kind of wanted to highlight was Intuitive Surgical. They had their earnings last week. This is the company that makes the Da Vinci robotic arms, the robotic surgery assistants in hospitals. And we saw their earnings last week. They were up significantly when that came out,
Yeah,
around
we highlighted
20%.
them a couple weeks ago as a company that we really like prior into earnings, and they exceeded their earnings. They estimated $1.58 per share. It came in at $2.40 per share, and it definitely popped on their forecast there.
Yeah, and
Uh,
I think that that's just an example of the broader market where a lot of companies are being held back because of, consumer fears, trade fears, and when it comes down to the actual, earnings numbers, the actual results, companies are doing very well.
yeah, we've seen very good earnings. We saw a lot of the financial companies come in very strong, although there are some concerns. But now we're looking at a lot of tech companies this week. So I think we got Google, Amazon, Microsoft. Apple are all coming in this week. So we should see quite a bit more coloring on what that looks like. Also, there's an old saying, a famous investor named Martin Zweig. Uh, I always say his last name right. Anyways, he would say, "Don't fight the Fed." And right now, we're going to have the federal meeting on Wednesday, and they're estimated that I think they're almost certain that they're going to lower interest rates by the overnight lending rate by 1/4%. So if interest rates are coming down, that's good. So we saw good gross domestic production numbers. We did see some inflation, but not a lot. It's 0.2% up. So if the interest rates come down, that's the last leg of the stool of the economy is housing. And if we could get interest rates to come down enough where houses or people could come off these low interest rates and make changes, they could really open it up if they could get down the low. I don't know if 1/4% is going to do it, but it does help with businesses and lending. So as the interest rates, and especially if they indicate that they're going to have further rate cuts, which is very likely, that would be really helpful. And back to Marty Zweig, don't fight the Fed.
No, I think one thing we could highlight is companies that aren't performing well in a day like today.
Yeah, we
Uh,
want to be.
No, I think one thing we could highlight is companies that aren't performing well in a day like today.
Yeah, we want to be
Um,
fair and balanced. Yes.
and I think it just tells you a little bit more about the market. And really, the only sector that was down today was commodities. And we're seeing in materials, things like oil, the miners, gold and silver are down, and really transition back to these companies' actual earnings when we get these earnings reports in. So I think that's a good sign for the overall market. Not maybe not so good if you were a big gold fan.
Yeah. So we are seeing the pullback in all the precious metals. Like today, 2.5, almost 3%. Well, excuse me, 2.78% down. And it's kind of been falling over the last week. Excuse me. To be fair and balanced, we talked about Intuitive Surgical being up on earnings, a call that we advocated and it went up the right direction. But let's also we talked about rare earth metals and we talked about Mountain Pass, symbol MP. And that's kind of going the way as gold. But with President Trump, I think he signed an agreement with Australia to get rare earth metals from there. He's been through Central Asia this week. I think he's talking to Thailand or Singapore, one of these countries, trying to see if they get some rare earth deals there. And if he gets a deal with Xi Jinping from China, I think that's all coming down where it was like we're not going to get rare earth metals at all to now we are going to get rare earth metals from other places. So Mountain Pass, which I don't know that we said, hey, go buy it right now, but we talked about it because there's so much news around it. But
Yeah.
it is pulling back quite a bit. Matter of fact, it's kind of sitting at a support level here. Look at this. It kind of
I do
bounced.
think in the long run, Mountain Pass is still a good position. It is, the leader in U.S. domestic rare earth mining. They're the closest company to profitability in the space. And so I do think it's something to keep an eye on in the future. I don't think we're going to fully go back to, 100% foreign sourced rare earth metals. But it did need to cool down a little bit, which is expected when we get, easing tensions with some of these foreign producers.
Yeah, and one of the other ones we coupled this when we talked about it was Albemarle. Uh, And as you can see, we had a nice run up, and today it's down almost 9% on probably with the talks with China. But it's still, out of the 3 days, it's still actually up. If you took a 3 day average or 4 day average, we're still up. So a volatile company. So a little follow up on some of the names that we've tossed around in the last few weeks and just kind of where we're at. Really, we advocate long-term investing. We want people to buy things that you can hold on to for years. That our favorite holding time is forever, to copy Warren Buffett's phrase. We love to see people buy something at a good buy price, hold on to it for a long, hopefully forever type of positions. Obviously, taking profit, maybe closing it down if there's some problems with it. And really, the core of our investing philosophy is being diversified, but then peppering our portfolios with individual holdings that we feel will do better than the indexes will. But if you're going to have individual holdings, you have to have a exit strategy. You have to have someone that's watching it that has a way to get out if things aren't going well. If you get overweighted in one stock and it does poorly, or if it falls apart, you could get really hurt. So we don't really advocate being super invested in one company. We do feel like being concentrated in some positions can help you grow your portfolio faster than the S&P 500 or the index would, but there's a risk associated with that, and you need to be aware of those risks. So, anything you want to add on that thought, Blake?
No, thanks for sharing and a little bit about what we do.
Hmm.
Here at WealthGuard Advisors, we are a registered investment advisor directly with the SEC. And part of that is a fiduciary responsibility to our clients. So we're committed to always putting our clients' best interests first. Our team specializes in personalized asset management and financial planning designed around your unique goals. We work on a straightforward fee-only basis, no setup fees, no closing fees, just transparent pricing for the services we provide. So if you're interested in taking the next step towards a confident retirement, we'd love the opportunity to sit down and talk with you and see if we could be a good fit for your needs. Thank you so much for watching, and we'll see you next week.
Yep. Thank you for tuning in. Have a great week.